And good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, August the 8th, 2022. Well, as I had anticipated and even discussed last night, the NASDAQ did manage to first sail lower and then find the nerve and find the energy to go ahead and blast higher and get slightly above 13,400. Coming in today with a high at 13,419. Now, again, I remain in a position where I'm still looking for a completion to this corrective or counter trend rally that we have been in since June, mid-June. So now we're working very close to up to 2 months, and it remains at a minor degree for me. But as I discussed last night, that I am continuing to run both counts side by side, but in an effort to actually keep it that way, I'm now putting them together here, and one I am showing in parentheses, and the other is again just labeled as it would be. Now, where does all this stand? There are no real changes to make. I look here at the daily, and I'm still counting it as an ABC. I'm still counting this as a 1, 2, 3, 4, 5. I will drop down to the hourly chart real quick and take a look at this internal. There's a 3, there's the 4, 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5. Then it comes back down. So if I go back down and I say 3, 4, 1, 2, and then 1, 2, 3, 4, 5, a 3, 4, 5, 3, 4, 1, 2, 3, but it's too far down. So I'm still in a position where I am concluding that this high is it. That should finish the 5, which I'm leaving kind of hanging out up here. And again, that would be moved over, but it's just if I move out to that daily chart, you see that it lines up. But it would be here. In fact, I'll go ahead and do that. Let's go ahead and move that over and put the 5 here and put the C here and go up and find that 2 and put the 2 over here. Bring this 3 up to here and the 4. It's everything gets all, oops, out of place when you move the charts around. The 4 there. So that lines it up a little bit cleaner. So, but again, it truly doesn't feel, and I'm going to open up this last part. It doesn't feel like it's really wanting to come off in a 5 waves. Even if I take this down to the 30-minute and we look at this internal, well, 1, 2, that maybe we get a little small in the 30-minute. We got a 5 down, and this is just a small little wave 2 possibly. It's yet to be determined and seen. So we're looking for the market to give us a confirmation. Again, when I'm doing this analysis and I'm reading the waves, it is the market that puts the close on each move. It is the market that lets us know, yep, we're done, and now we're going on to the next one. That's why I will continue to say, as I did yesterday, I will leave open the possibility for an additional run up, for a look for that to get to 13,400 or above. We have that stronger resistance still above at 13,476, which, as it turns out, is on the weekly chart, and it is the 50 period EMA. And that right now is at 13,477. So it still remains there. That's not going to change. So that resistance still in place. They gave it a shot today. It didn't. It came off pretty strongly once again. And so, but still, what we saw on the close, then buy it back, buy it back, buy it back, buy it back, buy it back. This thing actually went down. It closed at 13,213, and that's after producing a low this morning at 13,116. I believe that was it. 112, 13,212. No, sorry, 13,120. My eyes get a little tired at the end of the day. So 13,120, and it closes up over 90 points. So again, they're buying it up after, so the market closes, and then hedge funds and mutual funds and everybody who's got to come in and still do business, they have 1 hour to take care of all that after hour orders, buyers and sellers that meet, they get it all done. And then really, in my opinion, the last 20 minutes or the last 10 minutes or even the last 5 minutes are the marking session. That's where this one wants it up, this one wants it down, this one wants it up, et cetera, until eventually they've got the S&P up on the day, they have the Dow up on the day, they have the Russell up on the day, and they have the NASDAQ up on the day. That was the plan. They weren't going to let it close down. So again, whatever their purpose is, I don't know. And to be honest with you, I don't really care, but it does leave a more bullish tone out there for everybody. So here's what I think we can expect for tomorrow, or at least what I will be looking for tomorrow. I'm going to push out here to the 4-hour chart. And again, if this truly did complete us, and now we're beginning on a minor third down, or push these over, it's going to be wave C is complete on the minor degree, and then one up on the intermediate degree. It's intermediate wave A. Again, right? Because of this, if we move it over a little bit more, we're going to find the intermediate degree wave C and the primary wave A. So that's this case right here at 11,068. Then what are we looking at? Well, we're looking at the completion of the minor C and the primary A. So one more time, go back out. Let me take a look at the daily. Let me bring that into focus for us. I still feel that at 16,768, all-time high, that completed intermediate wave 5, primary 5, cycle 5, and super cycle wave 3. That's how that represents. So we are in this corrective process, this longer term corrective process, which is going to ultimately produce a super cycle wave 4 corrective decline. What's going to be within that? An ABC of intermediate degree, an ABC of primary degree, an ABC of cycle degree. So we're still pushing down, in my opinion, we're pushing down still within this intermediate wave C. And so my count remains, and these are alternate counts. So they're running together because both can still be in progress, and we won't know until this next decline comes as to whether it's going to be an intermediate B wave, which would not be expected to make a new low below 11,068, or will it be a minor third wave, which would be required to put in a new low below 11,068. So we have enough hot spots going on around in our country, within our government, within the world. There's enough hot spots that we just need to pick and choose from one to determine. Now, what's providing the bullish between yesterday and today? Well, in my opinion, it is trying to interpret the Congress finally passing an agenda package, which the president ran on when he was running for election. He ran on this, and it has finally gotten done. And so it has passed the Senate, it's back at the House. I'm sure the House will pass it. And then it goes to appropriations. It goes to how it's all going to be signed into law, how it's all going to be appropriated, how that the funds are going to be placed into the correct places so all of this work can begin. Now, in terms of, is it a bullish package or a bullish picture or a good picture for our country, the United States? Yes, it really is. It's going to bring about good paying jobs that will go over a period of time and not just be temporary, because it is going to do a lot of repairing to our infrastructure. So that's the roads, the bridges, the electrical grids, the building out of charging stations for this shift over to electric vehicles versus gas-powered vehicles. Then we also have just the broadband, the internet infrastructure that needs to be built out so that we have a stronger infrastructure for that within our own country. The electrical grids in most areas of the country have needed strong repairs. Water needs to have strong repairs. So the infrastructure has really suffered for the last 50 plus years and now needs to be updated. And it's finally being passed, and some of that work will get done. Now, that is bullish. Now, what part of that package, in my opinion, is not particularly bullish for the market is how they intend to pay for a great portion of it. At least $300 billion worth will come from new taxes that will be placed on corporate level taxation. And so that's the part where I don't think that's going to be really favorable to the market, because all of our great corporations, which have kind of skirted, and most of them unfortunately sit in the NASDAQ, have skirted and skated from paying their fair share of taxes for years and years because they had internet businesses, because they didn't have to charge taxes. And finally, someone caught up. So companies like Amazon, companies like Apple, companies like several of the different ones that have product online now have to charge tax before it's delivered. So it is changing slowly, but now it's coming back even more to give clear demonstrations that corporate tax will go up and the companies will pay it. And how does that filter through? Well, they won't be reporting such great earnings because they're going to have to pay their fair share to all of the tax authorities before. Now, how much of an effect that's going to have? Well, we actually are moving through a corrective process. We're actually still heading towards a recession. Now, they're still not determining that they're going to declare a recession is actually underway or the country's in a recession. Because officially, it used to be 2 consecutive quarters of bad GDP puts the country in recession. Now they're backing off of that claim. Now we don't know. And in fact, they've put out, we bottomed at 11,068. And everything's great, everything's fine, come on back in. Everything's bullish. And et cetera, et cetera. As I presented last night, that still stands. But guess what? The market itself is going to tell us. So I continue to just talk about and encourage all of us as traders to not adopt or take on a bullish or bearish bias. It's not the easiest thing to do. And I'm a trader with over 40 years experience. So I want to tell you, it's not the easiest thing to do. You're looking like, what are they buying it for? Why are they selling it? Et cetera, et cetera. But I'm learning as I keep delving deeper into day trading that to take that kind of posture gets in the way, messes up my mindset, does not allow me to see those intraday moves, which are very important, and to one's success as a day trader. They provide tons of opportunity. I can't even during that take on a bullish or bearish posture, because if I'm thinking, why are they buying? Why are they selling? How long is this going to last? Why is that doing that? Well, you miss the move. Instead of just knowing that playing by the numbers, I'm playing the price action. I already have my levels. I've got my moving averages. I use order flow market profile, and that begins to tell me where different levels are via things such as point of control, value area high, value area low. These are developing areas, and they switch and they change as they did today very rapidly during the market opening. And then as the market finds where that value area is, whether it's going to be pushed to the upside or downside, that's all going to be based on supply and demand. What is the supply and demand at that moment? Are the buyers strong? So the demand is for buying. They want to buy. That will push a market to a value area where those transactions can take place. So keeping all of that in mind makes the numbers work, makes the calculations more important and keeps us in line with what the market is doing and whether we should be buying or selling and where and how far things should go. That's really what I feel my task is now. And by doing that, I use Fibonacci, I use Elliott wave, and I use the moving averages. So right now, if I go back out to that weekly chart, I can show you right there. There is the 50-period EMA on the weekly chart at 13,477. That remains resistance. And as far as I know, it could be a target. Now, above that, when I come back down to the daily, I've got the daily 200 sitting at 13,573. That's also going to be a pretty stiff resistance area. And then when I continue to just include some Elliott, and again, if I'm considering this all one move, whether it is the intermediate A wave or the minor first wave, these are the retracement levels. Now, we already surpassed and are now continuing to hold above, even though we've dipped twice. There is that support at 13,164, and we've come below it twice. And of course, we've successfully got back above it again and closed well above it today. And then above that, we now into a zone that for a second wave, a common area for it to retrace is between 50% and 618, 62% approximately. So those areas, that 618 percentage is at 13,066, 13,658, I'm going to call it. We'll make it a little bit cleaner. So there is still that could be in play. Now, again, on my count, as I bring it down off of the daily, even down to the 4-hour chart, you begin to see that we're kind of running out here. A, B, 1, 2, and then this beautiful extended third and the 4, and now we're extending again in the 5, but it does again look like it has completed. But again, all of this is kind of getting nasty and funky, which also kind of leans me towards it's a topping process. So again, waiting for the market to give us that confirmation. First thing, it needs to continue to slide lower. Here we are in the 4-hour chart. We've come down. We got below that 20, which you can barely see, but there it is right there. See, at 13,197, it got down below it, regained it late afternoon today to close above it. These are important things if you are quantitatively trading, so that when the models are run, it takes that point into consideration. And when it breaks, it's going to draw more sellers. When it breaks to the upside, it's going to bring in more buyers. So these also become effective. They continue to suggest that the trend right now, while likely rolling, remains heading higher. Our moving averages, the 200s, the 50s, the 20, still pushing higher. Now the 4 and the 8, a little bit more sensitive, a little more shorter term, have peaked. And here again, hooked. There, the 8's hooked, the 4's hooked. And that shows me that we should be going down. But we'll be looking for a break below the 20 again. But for it to hold this time, head down towards 13,000. So again, as I'm stating, and I said last night, that when the next leg down, so the rally phase is complete and we're beginning to pick up the decline again, whether it is a minor third or an intermediate B wave, the market should quickly give us that indication and confirmation by coming back below 13,100, which it didn't do today, was well on the way, got stopped at about 122, and then started to rally again. So once that's done and it can get below 13,100, I will be looking for it to come down to at least the 50 SMA and EMA, which are sitting at 13,006. They're now moving together. They've joined forces and they're just continuing to angle higher until we can break, and then it has to break solid. So it's going to cause the 50 to hook lower, and the EMA will go quicker than the SMA, and then we're heading down towards 12,664, which is the next support level coming off of this rally. Eventually, it will continue. We'll look for the 5 down, at least on the 4-hour, but most importantly, more on the 1 hour, but I'd like to see it on the 4-hour as well, to give us that confirmation that we're done. The rally's over for now, and we're done until we get a completed ABC, if it is the intermediate B wave, or 5 waves down, if it is that minor third. Now, where and how far can it go? Well, I'm going to back out to that weekly chart. Here we have, that's for the upside still. Coming off, we have 382. Now, this calculation is for the entire cycle fifth wave. So the beginning of that cycle fifth wave, in the case of the NASDAQ, is 2003. After the dot-com bust, the market nosedived. This is where cycle wave 5 began. So now I'm putting in, and what I'm doing here as well is trying to determine where primary levels should come in, where cycle levels could then be expected to come in. Because remember, eventually, as far as a super cycle wave 4 is concerned, I am looking for this to really get back to the 2009 lows. And in the case of the NASDAQ, we have to consider back to the 2003 lows. So I'm using between 2009 and 2003. Well, how's it going to get there? Let me just try to lay this out. If we're looking for an ABC down to complete primary wave A, again, I'm not calling it. I'm just saying that is the alternate view. If we get a minor third, then likely this third wave and then a 4 and a 5 to put in the C wave is more than likely going to come in down around in this area. I was suspecting that we could get all the way down to the pre-pandemic, all right, right after the pandemic, the March 2020 lows. That's where I am feeling that the primary A wave will complete. Then we'll get this strong primary B wave rally. Then we will get a nasty backbreaking C wave decline. And it is that C wave decline that may again bring us down to here or even lower. Then that finishes the primary degree ABC, which puts in the cycle degree A wave. Then we get an cycle degree B wave, which will again bring us up all the way back into these areas. And then one more time, we turn and we go down. And that is when I think we end up down here to here, those levels. Now, everybody's going to tell me I'm crazy. Oh my God, what's that going to do? You know, I can't begin to tell you, well, this is going to cause it, that's going to cause it, that's going to cause it. I again encourage, don't be looking at the market as a bullish and bearish, with a bullish and bearish posture. Stay open to the move. Stay open to the price action. Will there be time to position trade? Absolutely. This was tradable. This is over a month. By the time this is over, I'm sure it'll be 2 months or close to it. There's plenty of positions to put on and take advantage of the upside move. Well, I never really called it. It's like, no, that's not true, because I did. We tagged it. We looked for upside. We ran the numbers. If this was ending up being as one time, this was likely going to be the end of minor wave 3, and this is a minor wave 4. We still had a minor fifth wave. Well, once it broke out of a triangle pattern that was not correct, then it shifted over to a minor wave 2. But then I had to consider that it also could be the completion point for the primary A and the intermediate wave C, thus producing a little bit stronger of a recovery. Now, the market has put in my view, a clean ABC. What could work against this? That this A ends up being a 1, and this is a 2, and this is a third. So it would be a minor third, and then we get a 4 and a 5 bringing us up even higher. And then we've got an intermediate A. I don't necessarily see that because it's looking pretty complete and we're looking very toppish. And even on our weekly, we're cresting up here and oversold. Excuse me, overbought. Boy, that was a good one. We're cresting here and overbought. And that also suggests we should start to turn and we should come down. We'll see. We'll see how it works. And again, I think there are enough hotspots to feed a stronger decline right now versus a continuation of a rally. But here's the catch. Whether or not it turns into a minor third or continues to move higher under an intermediate wave A and as part of a primary B wave, that this primary B wave will get itself up. We're still going to be looking for an intermediate B wave and then another C wave up. And still right comes after all of that will be a devastating C wave decline. Again, remember, ABC for the intermediate degree, ABC for the primary degree, ABC for the cycle degree. I've just gone over that sequence. If this is true, then it's A, B, C to form primary A, then A, B, excuse me, primary A, primary X, cycle A, cycle B, cycle C. And the bigger they get, the harder they drop, the further they drop. That's also a factor. So no matter what's in play right here, we're continuing to look for additional downside. Tomorrow, I am going to continue to leave open the potential that they'll come in again and they'll attempt to buy it up again. This may take until Wednesday. Remember, on Wednesday, we have CPI. On Thursday, we have PPI and jobless claims. So there we have two numbers, and they may just walk that wall of worry right up to them. Because there's some in the group that believe CPI should start to show that inflation's under control. Okay. That's what they're being told. But I don't know. We'll wait and we'll see. Again, I'm not placing any value of anything on here. Let the market do what the market does. Trade it, play it along with your moving averages, and try to pick up market profile, order flow profiles, and work out those points of control and your value area high and value area lows. And naked and extended, they'll all come into play along with the fib, along with the moving averages, along with the Elliott, and you get a pretty good roadmap, and it's all tradable. That's where I'm going to leave it for today. Our next update will be on Tuesday, the 9th.